Paul Barrett here from Absolute Wealth Advisors with your September quarterly investment update. During the quarter, the major themes of the previous 6 months continued to play out. That is heightened political risk with US-China trade wars, unrest in Hong Kong, Brexit, Iran, and now with the addition of the Turkey-Syria conflict. That general level of uncertainty is leading to softening economic growth around the globe, and that in turn is leading to soft revenue growth at the company level. So all of those things are negatives in economic activity and for markets. Against that backdrop, we have central banks lowering interest rates to try to stimulate the economy. And given that none of the major political risks have turned into a very bad outcome, so far the actions of the central banks are supporting markets. So during the quarter, we had moderate returns from bonds of about 2%. The Australian share market grew by 2.5%. International share markets broadly were up by about 1.5%, but due to currency depreciation of the Australian dollar, in Australian dollar terms, international shares contributed a bit over 4% to returns for the quarter. Listed property trusts returns were muted for the quarter. Looking forward, on a 10-year horizon, valuations in markets look actually quite good. The Australian market is predicting returns of 7 to 8%, global shares of around 6%, and listed property trusts around 7% also. So, however, in the short term, we are coming towards the late end of a cycle, which means there is increased risk of a short to medium term market correction. What does this all mean? Well, for portfolios that are currently fully invested and at their target asset allocation, we're not recommending any changes. And for new money, we're recommending dollar cost averaging into the market over a 3 to 6 month period.